Hi friends, how are you all? How is studies going on? I hope all going well. So, क्या start करने जा रहे हैं? What are we going to start today? We are starting with a new chapter in customs, duty drawback. A very important chapter from exam point of view. Duty drawback. Seriously, 5 marks question from this chapter is 100% there in your exam. Either it can be in MCQ or it can be in a subjective question, but it will be there. Am I clear? And there are very small things which you have to keep in mind while studying this chapter. Now, first question comes, what is duty drawback? What do you mean by duty drawback? Now, understand first, what is duty drawback? See, understand, suppose I had to pay 100 rupees as tax. I had to pay 100 rupees as tax and I have paid 120 rupees and I'm getting 20 back. That is not duty drawback, that is refund. That is refund. I had to pay 100 rupees, but by something, by mistake, by anything, I have paid 120 rupees and then I have claimed for that excess 20 what I have paid. That is not duty drawback, that is refund. What is duty drawback? Understand, government want to promote export. Government want to promote export. No doubt here, export. See, on export, exports are zero rated. We'll be studying in GST. Exports are zero rated. Zero, that means while export, normally you will not be having export duty. Now, on export, you will normally not be having export duty, but assume you have imported some goods, you have paid import duty, and then you have exported it. Are you with me? You have imported certain things, you have paid import duty on that, and then you have exported it. I hope with me. Now there is no export duty. When there is no export duty in that scenario, you cannot take the credit of that tax you have paid on import, because even if you take the credits of no use, you cannot utilize it. So you will add it to the cost. You will add it to the cost. You know one something here. We are very clear with this. I have paid 1 rupee, and if I'm getting it back, it's not my cost. But if I paid a rupee, I'm not getting it back. It is my cost, and I'll add it to my cost. So because of that, if I am not getting it back, I will add it to my cost, and when I'm going to add it to my cost, when I'll export those goods, with that goods, this duty will also get exported, which government doesn't want. I hope with me. I hope with me. Zero rated means in the whole chain there is no duty at all. So what is government saying? Okay, you have imported goods and have exported it. You have imported and you have exported. See, in this chapter we will be studying 2 sections. In this chapter we will be studying 2 sections. Let's see which 2 sections. Section duty drawback. Duty drawback. We'll be studying 2 sections. Section 74 and section 75. We will be studying 2 sections in this chapter, section 74 and section 75. What is section 74? As such exported. As such exported. What do you mean by that? That means I have imported something. I have imported something. I have paid import duty, and without changing the form, I have exported it as such, as it is. As such means as it is. Now it depends. It only depends. I may export it without use. I may export it without use, or I may export it after use. I hope you get me. I have imported, I have paid import duty, I am not changing the form, I am as it is exporting. Now the only thing what can happen over here is I may import, I may not use it, and I will export. One scenario, that means I'm exporting it without use, and another scenario is I have imported, I have paid import duty, and I'm using it and then I'm exporting it. But in section 74, I am not changing the form. Now, on that export, there is no export duty. On that export, there is no export duty. Then what are you going to give me? What duty drawback are you going to give me, boss? Whatever import duty I have paid, whatever import duty I have paid, that I will get as duty drawback, provided I fulfill the required conditions. Whatever import duty, 98% 98% of import duty. I hope you're with me. 98% of import duty I will get as duty drawback, provided I fulfill the conditions if I export it without use. If I export it without use, but if I export it after use, I will not get 98% as duty drawback. My drawback percentage will come down depending upon the period of how much I have used. If I use for more period, my drawback percentage will come down. If I have used for less period, my drawback percentage will be high. We have been given in section 74 what is the period and for what period how much drawback you're going to get. Am I clear? I hope you're with me till here. Again repeating. See, section 74 I'm discussing as of now. Section 74, I'm just giving you an overview as of now of the chapter. Then we'll go in the depth of the chapter. One of the very important chapter from exam point of view. One of the very important chapter from exam point of view. I hope you're with me. So again, listen to what I'm trying to say over here is 1. Section 74, duty drawback. When I say duty drawback, what I'm going to do, I'm going to export. Government want you to export. Government want to promote export. To promote, they need to give me some motivation. The government is saying, okay, Meeta, you export. While export, we will not levy any export duty. Okay. And whatever duty you have paid while importing, I will give you the drawback also. I will give you duty drawback. That means somewhere or the other, I have that motivation of doing export. Okay, I will get my money back. Section 74 says you have imported, you have paid import duty, and then you have exported without changing the form. In that case, you will get duty drawback under section 74. You will get duty drawback under section 74. I hope you're with me. Yes, under section 74. In that case, what is the only thing what can happen over here is either you can export without use or you can export after using it. But you're not changing the form, you are exporting it as such. Now, if I'm exporting it without use, I'll be getting 98% drawback, and if I'm exporting after use, my percentage will come down. Am I clear? 74 clear? Now what is 75? 75 says that I have imported something, in a better way I can say I have imported raw material. On import of raw material, I have paid import duty. Then this raw material I have converted into finished goods, and this finished good I have exported. This finished good I have exported. Section 75, the form changes. The form changes. I hope you're getting my point. So now in section 75, they will have to tell me how much amount or percentage of duty drawback you will give me. Because see here what is going to happen. You have imported, while importing of raw material, you must have paid import duty. You have imported, while importing of raw material, you must have paid import duty. Then for converting that raw material into finished goods, you must have paid something else. And then you're exporting it. So in that case, exactly what have you paid? You will not come to know. So government will give us the rate. Government has given us a rate. All industry rate. AIR. All industry rate. Government has given us all industry rate. In fact, there are few more rates, brand rate, special brand rate, which will be there in specific scenario, which we're going to study in this chapter. We'll be having three rates over here. All industry rate, brand rate and special brand rate. Special brand rate. I hope you're with me. When which rate will come into picture, we'll be studying as per the section. Am I clear? So here in section 75, form is 100% getting changed, but in section 74, you are exporting it as such. Am I clear? But yes, there are few conditions. You need to satisfy all the conditions to be eligible for duty drawback. Am I clear? Can I go ahead? Okay. So now let's come to section 74. Drawback allowed on re-export of duty paid goods. Drawback allowed on re-export. You're importing and you're exporting it again. Section 74, and for this you have in fact rules also. Re-export of imported goods. Drawback of Customs Duty Rules 1995. We'll study. Okay, what is a drawback? What is the meaning of drawback over here? Drawback in relation to any goods exported out of India means the refund of duty or tax or cess as referred to in Custom Tariff Act 1975 and paid on importation of such goods. Drawback means while importing, whatever duty you have paid, you are going to get drawback of that amount. That is called as duty drawback under section 74. Thus, IGST and GST compensation cess paid on imported goods is also eligible for drawback. Mark this important. See, we all know what duty do I pay? I pay basic custom duty, I pay social welfare surcharge, I pay integrated tax under section 3 subsection 7, I pay GST compensation cess under section 3 subsection 9. Am I clear? So this I will get as duty drawback. Now what do you mean by export under section 74? Because until and unless you have not exported, you are not eligible for duty drawback. So what is export? Export means, or exporters, grammatical variations and cognate expression means taking out of India to a place outside India. We all know this. Taking outside India taking from India, out of India to a place outside India, and includes stores or equipments for use on board or vessel on aircraft proceeding to foreign port or foreign airport. Your stuff is going as stores in a foreign going vessel. Stores is also considered as what? As export under section 74. Am I clear? So two things. If you're taking goods outside India, it is export. If it's going as stores in foreign going vessel, it is export. Now what is taking outside India? As per section 2 subsection 27, India includes territorial waters. That's it. This is my territorial waters. This is India. We know territorial waters was 12 nautical miles from the coastal line. 12 nautical miles from the coastal line. That means the moment goods have crossed territorial waters, territorial waters, export is done. The goods are exported. Till the time they are in the territorial waters, it is yet not exported. Till the time they are in territorial waters, it is yet not exported. I hope you're getting my point. Yes, the moment they cross the territorial waters, it is exported. Am I clear? Can I go ahead? Now, conditions to be satisfied to get eligible under section 74 for duty drawback. Drawback allowed on re-export of duty paid goods. If you have paid duty at the time of import and those goods you have exported, then only you are eligible for the drawback of duty paid. If no duty paid at the time of importation, the question of drawback will not come into picture only. Duty drawback is allowed of custom duty paid on goods imported into India and which are subsequently re-exported. Only imported goods on which duty has been paid on importation are eligible for drawback. So if you have imported, you have paid duty, and when you're exporting it, then only you're eligible. Am I clear? Order of exportation. Yes, now the question comes, what all export I will consider to be eligible for section 74. So your three export are considered. One, normal export under section 51. We have studied in depth. This is the last chapter. We have studied in depth. Normal export, you have to submit shipping bill of export, and under section 51, I hope you remember all that stuff. Am I clear? Second, baggage, and third is post. So if you're exporting under normal export, if you're exporting under baggage, and we're exporting through post, because in case of normal export, baggage and post doesn't come, you have a special provision for baggage, you have a special provision for post, which we all have done completely. Am I clear? I hope you're getting my point. Am I clear till here? Can I go in to this three? If you're exporting under normal export, if exporting under baggage, if exporting through post, all these three will be eligible for duty drawback under section 74. Okay, next condition. The goods should be capable of easily being identified. I have already said in section 74, you will not change the form. Whatever you have imported, you have to as it is, as such exported. That means the form should not be changed. As a proper officer, I should be easily able to identify what was imported, and the same thing is getting exported. Am I clear? Next, if this is fulfilled, I am eligible for 98% drawback is allowed equal to 98% of import duty. I'll be eligible for 98% of import duty as duty drawback, provided this 98% comes into picture only when you have exported without use. Only if you have exported without use. If I'm exporting it after using it, then I'm not eligible for 98% duty drawback. Then the percentage will vary as per the period of usage, which will be studied in next 10 minutes. So what is it over here? 98% of import duty is allowed as drawback in case the goods are exported out of India without being put to use. In case the goods are taken into use and then exported, duty drawback shall be allowed at the notified rate under section 74 subsection 2, having regard to duration of use, depreciation in value, and other relevant circumstances. So your percentage will vary as per your usage, as per the depreciation in the value, which we are going to study. Next condition to be satisfied to be eligible under section 74 is re-export within 2 years. Am I clear? They see what are they trying to say over here is the goods must be entered for export within 2 years from the date of payment of duty. The day you have paid import duty, date of payment of import duty, the day when you have done the payment of what? Import duty. From that date, within 2 years, you have to export it again. Then only you are eligible for duty drawback under section 74. However, extension can be granted by the board on sufficient cause being shown. Assume I am unable to re-export within 2 years and I am exporting after 2 years, and if department feels or board feels that there was some genuine reason, they may allow and give me duty drawback, but that's not my right. Am I clear? Next, in case of goods assessed to duty provisionally under section 18, provisional duty, you already know provisional means at the time of submitting bill of entry, I was unable to identify the value or the rate. So I went to department. I said I am unable to identify the duty. So department said, okay, as of now you pay provisional duty. Then we will do your final assessment and then you pay the balance, or we'll give you the refund, as the case may be. Section 18. So now here you have two things. One is provisional assessment and one is final assessment. By the time of provisional assessment also I am paying duty. Final, it may happen I may have to pay, I may not have to pay. So now the question comes, my 2 years in case of provisional assessment will be from which date? Provisional assessment or final assessment? Let's see this. In case of goods assessed to duty provisionally under section 18, the date of payment of the provisional duty shall be deemed to be the date of payment of duty. Am I clear? The date on payment of which duty? Provisional duty. The day when you make payment of which duty? Provisional duty. From that day, within 2 years, you have to go for export again. Am I clear? So see, when this section 74 comes into picture, simple here. Suppose there's an exhibition in India. There's an exhibition in India and I am from US, so I have imported goods into India for that exhibition. And by the time of import, I have paid import duty. Now I'm going to take the goods back to my country. Am I clear? I'm exporting it again. So whatever import duty I have paid, I will be eligible for duty drawback. Am I clear? Section 74 is resorted to where there's excess shipment. I wanted 100 only units and 180 units were imported. So while importing, I had to pay duty on 180, and what I did for the balance 80, I have re-exported it again. Or wrong shipment or goods have been imported for the purpose of participating in an exhibition and then sent back. These are scenarios when section 74 may come into picture. Am I clear? Next, requirement of validation. There is no condition of requirement of validation in section 74 because boss, validation means you are adding value to your product. But here I am not changing the form at all. I am not doing any value addition. Realization of export sale proceed. Next condition. Realization of export sale proceed in convertible foreign exchange. Realization of export sale proceed in convertible foreign exchange. There is no requirement to bring the export proceed in convertible foreign exchange. There is no requirement to bring the export proceed in convertible foreign exchange. There is no such requirement. We have some specific requirement in section 75, but there is no such requirement in 74. Boss, why all these small things are important? They may ask these things in the question and they will ask you to calculate the duty drawback. It may happen that I have not satisfied one of the conditions, so rather than calculating duty drawback, I have to say that I am not eligible only. Am I clear? Am I clear? Now, rules. Section 74 I have given this much. Now there are rules which is talking about further things. Re-export of imported goods, drawback of custom duty rules 1995 has been framed. Rates of drawback under section 74 subsection 2 is re-export after put to use. See, we know that without put to use, if we have re-exported within 2 years from the date of payment of import duty, then you are eligible for 98% of import duty paid. But if you have used and then exported, then you are not eligible for 98%. So what rate you are eligible? The rate if drawback in the case of goods which has been used after importation shall be notified by central government and have regard to duration of use and depreciation in value. So here we have 3 notifications. All 3 are deadly important. Deadly matlab very important. And if I go with the latest paper pattern, they're asking scenario based MCQs, case study based MCQ. You may have a case study based MCQ on duty drawback topic. They may give you a full-fledged question. One question talking about imported, exported without use. Same question talking about imported, used and then exported. Same question talking about imported, form change and then exported. Same question talking about imported, used for a specific purpose and then exported. And they may give you 4-5 different questions for the one same question. See, if you see the scenario based question in indirect tax, nothing great. a practical question, a full-fledged question, they have converted into an MCQ. Simple. And on that question, they have given sub-question. It is nothing but the comprehension which we used to do in English when we were small. An unseen passage, on an unseen passage, they have given us the question. Same over here. They have given us the question, and on that question, they are asking us many sub-questions. Am I clear? So first, notification. Really very important. No drawback shall be allowed. The following goods are used after importation. I hope you're with me. See, if you've used, suppose you have imported this phone. You have imported this phone and then you have used and then you are exporting it again. Boss, for this phone, you will not be eligible for any duty drawback. Wearing apparels, clothes, T-chest, exposed cinematographic film passed by Board of Film Censors in India and unexposed photographic film, paper and plates and X-ray films. Please learn the 4 points. First is wearing apparels. Second is T-chest. Third is exposed cinematographic film passed by the Board of Film Censors in India. And fourth is unexposed photographic films, paper and plates and X-ray films. If this four you have imported and then used and then if exporting it, in this case you will not be eligible for duty drawback. It implies that, mark this important. It implies that if these goods are not used after their importation into India and subsequently re-exported in the condition they were imported, then they will be entitled to 98% duty drawback. That means for this four, you will not be eligible for drawback only when you import and use it. Once used and if you then export, finish. No drawback allowed. But if you import it, you don't use it and then you export it, then you'll be eligible for 98% duty drawback provided you satisfy all the conditions. Am I clear? First notification. Second. Now before coming to second notification, let's go to third notification. Before coming to second notification, let's go to third. So just I'm trying to explain what is second and what is third. Now your usage, assuming we are saying okay, you are using, now using for what purpose? Are you using for your personal purpose or non-personal purpose? That means business purpose or personal purpose. I hope you're with me. So basically, if I go for second notification, second is saying in respect of motor cars or goods, but it includes everything, imported by a person for his personal or private use. That means you have a different drawback rates depending upon the usage. If you're using for personal purpose, the drawback rate will vary. If you're using for non-personal purpose, if you're using for a business purpose, the drawback rate will vary. So notification second is talking about when you're using for personal purpose. Notification second is talking about when you're using for personal purpose, and notification third is talking about other goods, as in that means non-personal purpose. We'll be reading both of them and then I have made a summary chart. We'll see that afterwards. Simple. Your drawback percentage depends upon your duration. Length, I'm first teaching you third notification. Why? It's talking about scenario other than private, other than personal purpose. Length of period between the date of clearance for home consumption and the date when goods are placed under custom control for export. That means I have imported the goods, I have submitted bill of entry, I have paid the import duty, and I have got an order for clearance for home consumption, and the date of clearance, the day I'm actually The day I'm actually clearing the goods for home consumption. That means the day I got the goods. And second, the date when goods are placed under control for export. That means the day I have submitted shipping bill, and then the day I got let export order permission, and then the goods are in their control. This period. Am I clear? This period. If it is not more than 3 months, that means up to 3 months. Not more than means up to 3 months, I will be eligible for 95% drawback. If it is more than 3 months, but up to 6 months, 85%. See, here it is 3 months ka gap. Up to 3, up to 6, up to 9, up to 12, up to 15, up to 18, and more than 18. I hope you're with me. More than 18. Am I clear? So this is very easy to learn. Up to 3 months, up to 6 months, up to 9 months, up to 12 months, up to 15 months, up to 18, and more than 18. If it is up to 3 months, 95%. If it is more than 3 months but up to 6 months, 85%. It's more than 6 months but up to 9 months, 75%. It is more than 9 months up to 12 months, 70%. If it's more than 12 months up to 15 months, 65%. If it's more than 15 months up to 18 months, 60%. If it's more than 18 months, that means more than 1.5 years. Forget, no drawback allowed only. Now how to learn? Months, it's a gap of 3 months. If you see in percentage, initially it is 10, 95 to 85, 85 to 75. And that is 5%, 70%, 65% and 60%. So remember the maximum drawback what you can get in case of use for other than personal purposes, 60%. Am I clear? Am I clear? Maximum drawback. Am I clear? I hope you're getting my point. I hope you're getting my point. 95% will be starting and end will be 60. Am I clear? Getting my point? You have to just learn this. But yeah, this can be important for MCQs. 2 marks question just by remembering the period and by remembering the percentage. Am I clear? Now this is which one? Which one? You have imported, you have used other than personal purpose, other than private purpose. So this is your duty drawback percentage. This is your duty drawback percentage. Now question comes, if you have used for your personal purpose or a private purpose and then you are exporting, this is the language. In respect of motor cars or goods imported by a person for his personal or private use, drawback shall be calculated by reducing the import duty paid in respect of such motor cars or goods by 4%, 3%, 2.5% and 2% for each quarter or part thereof during the first year, second year, third year, fourth year respectively. Oh my god, ma'am, what language? Can't help it. Act. It's like a jalebi. You, and then you. Am I clear? Get a point? Nothing simple. How can they make a life simple? They could have given simple percentage. No. What they're trying to say that if you are exporting it in the first year only, so every quarter or part of the quarter, every quarter or part of the quarter. So let's say an example. Let's make a life simple. Let me explain you people. Assume, let's take a rough date. Assume today is 20. Wait. Assume today is, what is wrong? Okay. Assume today is 21st February. Am I clear? Am I clear? I hope you're with me. Now, what are they trying to say? First year, if you are importing it in the first year only, so now every quarter or part of the quarter, assume today is 21st February 2020 and you are using it and exporting it on 3rd December 2020. 3rd December. I hope you're with me. So now how many quarters you have use. Jan, Feb, March is one quarter. You will not have your own quarter. Jan, Feb, March will be one quarter. Jan, Feb, March. February, though you have used for only few days. Jan, Feb, March. April, May, June will be another quarter. July, August, September will be the third quarter. October, November, December will be the fourth quarter. That means 4 quarters. First year, 4 quarters. Am I clear? The first year, every quarter will be 4%. First year, every quarter will be 4%. That means total 16%. In this case will be reduced. That means out of 100 man 16 will be getting a duty drawback of 84%. See what they're trying to say over here is in the first year if we export it again. So in the first year what are we going to reduce is 4% per quarter. If you go for second year it will be 3% per quarter. If you go for third year it will be 2.5% per quarter. And if we export in the fourth year, it will be 2% per quarter. So if you just go and see this table, just try to make your life simple. If you export it in the first quarter only, you will be eligible for 96% duty drawback, 4% because first year, first quarter 4%, first year, second quarter 8%, first year, third quarter 12%, first year, fourth quarter 16%. Am I clear? By 4%, your drawback amount will come down. So here it will be 16%. So what you're going to get drawback is 84%. Second year, now it is 3%. So assume if I'm exporting in second year, first quarter. So last year's 16% gone and this year's first quarter 3%. 16 plus 3 is 19%. I will be eligible for 81% duty drawback. I hope you're getting. Am I clear? Am I clear? Same second year, second quarter for the 3%. 3, 3, 3, 3. I hope you get a point. Then if I go for the third year is 2.5%, 2.5%, 2.5%, 2.5%, and fourth year is 2, 2, 2, 2, 2. I hope you're getting my point. Yes? Am I clear? Am I clear? Just write this third and write this fourth. Am I clear? Am I clear? Can I go ahead? Can I go ahead? So let's read this again. Let's read this again. If I am, what have I done? I have imported. I am using it for what purpose? For personal purpose. For what purpose? Personal purpose. And then I'm exporting it again. So if I am exporting it in the first year, every quarter will be 4%. Second year, every quarter will be 3%. Third year, every quarter will be 2.5%. Fourth year, every quarter will be 2%. Am I clear? Am I clear? Can I go ahead? Okay. Okay. So now let's go ahead. This is 4% for first year, 3% for second year, 2.5% for third year, and 2% for fourth year. But now there are few conditions. What are those conditions? In case the above period is more than 2 years, see up to 2 years it is okay. But in case the above period is more than 2 years, drawback shall be allowed only if the board has extended the period beyond 2 years on sufficient cause being shown. That means it is not that you can export in 4 years. No. First 2 years it is okay, but beyond 2 years if you are exporting it and for one duty drawback, you will be eligible only if board is satisfied and board gives you the permission. If motor cars or goods has or been used for more than 4 years, then no drawback shall be allowed. If you have used for more than 4 years and then if you are exporting it, no drawback will be allowed. Am I clear? So let's summarize this one. Let's summarize with the help of a flowchart. Duty drawback with respect to imports, goods imported for business purpose and goods imported for personal purpose. If goods are imported for business purpose and it is exported without use, without use. If it exported what? Without use. I hope you're with me. If exported without use within 2 years, duty drawback at the rate of 98%. After 2 years, no duty drawback. Am I clear? If it is used for business purpose and if it is exported within 18 months, drawback will be allowed as per the percentage given. Drawback will be allowed as per the percentage given, up to 3, more than 3, up to 6, more than 6, up to 9, more than 9, up to 12, more than 12, up to 15, more than 15, up to 18, and more than 18. Am I clear? Am I clear? So if it's using for business purpose and after using and then exporting, percentage will vary. But if you're not using, only the 98%. Am I clear? And if you import for personal purpose, within 2 years, the first year, first quarter 4%, second year every quarter 3%. After 2 years, if exporting, you'll be eligible for drawback only when permission given. And what will the drawback percentage will come down by 2.5% in the third year and 2% in the fourth year. Am I clear till here? Am I clear till here? Let's go with the illustration. Spatel Wireless Private Limited imported 5 mainframe computer system from Flexisonics Computers USA on 30th January, paying custom duty of 30.45 lakhs. The computers worked for some time, but in June, some technical faults developed in the system, resulting in complete closure of the work. On being informed about the problem, Flexisonics Computer sent his technician from USA to repair the system in June itself. However, since no solution was found, the management of Spatel Wireless Private Limited reshipped or returned the goods to Flexisonic on 31st December. I had imported on 31st January. I had paid duty on 31st January as 30.45 lakhs, and on 31st December it was back exported. You are the financial controller of Spatel Wireless Limited has approached you for advising whether import duty paid can be taken back from the central government when goods are sent back. Advise him. Now, I had imported, I had used for my business purpose. Am I clear? Use for what purpose? Business purpose. I hope you're with me. Yes? I hope you're with me. I've used for what purpose? Business purpose. So now question comes for how much time I have used. So it was 31st January 2000, take whatever year it is, 2020, and 31st December 2020. Am I clear? So February, March, April, Feb, March, April, May, June, July, August, September, October, November, December. How many months? 11 months. How many months? 11 months. I hope you're with me. So if it is 11 months, so it is more than 9 months but up to 12 months. If it's 11 months, so more than 9 months but up to 12 months. So in that case, if I go with the table over here, more than 9 months and up to 12 months, it is 70% drawback I will get. 70% drawback I will get. That means if I pay 30.45, 70% comes to 21.315. I'm eligible for 21.315 lakhs drawback. I hope with me. Am I clear? Am I clear? But boss, only writing this much won't give you marks. It's very important that you have to frame your answer. You have to see, yes, it is eligible for 74 because I have not changed the form. Then you have to write the provision of 74. Then you have to say 74. Normally you get 98% if you export it without use. But if exporting after use, now for what purpose are you using? So you're using for business purpose. In business purpose, then I'll see how much time you have used. Up to 3, up to 6, up to 9, up to 12, up to 15, up to 18, and then more than 18. Accordingly, my percentage will vary. I hope you're with me. And then you have to say what has happened in that case, relate the case with the question, and then give the answer. Am I clear? Yes? Next example. Mr. A has imported a motor car for his personal use and paid 2 lakhs as import duty on such goods and re-export after 6 months and 20 days. That means within That first only 6 months and 20 days. One quarter is 3 months, two quarter is 6 months, and then you have 20 more days. Even if you have one extra day also, it will be counted as a quarter because it is quarter or part thereof. So the 6 months and 20 days means actually 3 quarters in the first year. So every quarter is 4%. So 3 quarter, that means 4% per quarter, which comes to 12%. That means 100 minus 12, that means what is this? 100 minus 12 is 88%. That means you'll be getting 88% drawback of 2 lakh, which comes to 1,76,000. Am I clear? Am I clear? Next question. Computation of duty drawback under section 74. Calculate the amount of drawback under 74 in the following 3 separate cases. First, X input computer for office use, paid 5 lakhs and re-exported after 13 months. That means after 12 but up to 15. Office purpose. After 12 but up to 15. Yes or no? More than 12 but up to 15 is how much percent? 65%. How much percent? 65%. I hope you're with me. So in this case, how much you have paid? 5 lakhs. So 5 lakh 65% comes to 3,25,000. I hope you're with me. Am I clear? Can I go ahead? The next question. Y imported goods for its personal use and paid 1 lakh duty and was re-exported after 3 months and 10 days. 3 months is 1 quarter. 10 days is second quarter of the first year. That means 2 quarters. That means 8%. That means you will be getting a drawback of 92%. 100 minus 8 comes to 92%. That means you'll be getting 92,000 rupees as duty drawback. But again, you have to give the provision that first year every quarter 4%, second year every quarter 3%, third year every quarter 2.5%, fourth year every quarter 2% will get reduced. Am I clear? And with the third question, they imported wearing apparel and paid to 20,000 import duty and they re-export after 6 months. Boss, very important. Wearing apparel. Wearing apparel, you are not allowed duty drawback only when you use it and then export it. In this question, they have not specified that whether I've used or not. That means I've not used it. So I'm eligible 98%. How much percent? 98%. I hope you're with me. But what is it in the question? Z input wearing apparel and paid as input. They are re-exported after 6 months. So now it's re-exported after 6 months. Now it's up to you. When they have not given anything, you have to take assumptions. I would have taken both the assumptions. The question, no duty drawback shall be allowed in wearing apparel which has been taken into use and then re-exported. In the question, use is not given. So, right, assuming use and then exported, no drawback. Assuming not use and then exported, 98% duty drawback. You should write both the answer. Am I clear? Let me read the question again. Z imported wearing apparel and paid 20,000 as import duty. These are re-exported after 6 months. They have not specified about use or not use. So you are free to take the assumption. But yes, I would have taken both the assumption because you don't know what answer is there with the paper checker. Am I clear? Am I clear till here? Any problem till here? That means we are done with section 74. Now we'll be doing the rules of section 74. There is something important which we have studied in the rules, but till now any problem? Can I go ahead? Okay.